First of all, I want to get a sense of why launch those funds now. We know that there's a lot of volatility in Nigerian financial markets, and some might even argue that mutual funds recently have not been the uptake for mutual funds have not been very good recently. But why would BGL Asset Management venture into that terrain right now?
Well, the market presents significant upside opportunities going forward. You've seen the rates, prices bottom out, particularly in the equity space, for a long time. Now, we want to be able to provide the investing public with the opportunity to ride the tide on the upside. Also, there's been a specific strata that have always been the target of mutual funds. We want to go a step lower to ensure that the so-called informal sector gets a fair playing chance.
All right, so that's the retail. It's obviously retail focused.
Correct. And if you look at the hurdle rate for entry, you'd see that it's 5,000 in the case of one fund and 10,000 in the case of the other.
But I'm looking at some of your projections, and I think, well, I just want to get a sense of your outlook for the equity markets. So far, the market is up 14%. You are looking at, in the second year, a 28% return projection for the equity-focused fund.
Correct.
And then, of course, 44% in the third year. Just give me a sense of is this a reflection of your expectations of the equity market, or is it more a result of the tactical asset allocation strategy that you are looking to employ?
Well, it's a combination of both. First of all, I'd said there's a significant upside. When you look at most of the equity prices now, they're seriously undervalued for quite a number of the companies there. Part of the tactical approach is to also ensure that you have quite a balance between the defensive stocks and the more aggressive ones. So that will be playing out in our investment strategy and is the major push behind the kind of projections we've made.
And then looking particularly at the equity market, where do you see the opportunities? More so because as you launch the fund, I anticipate that you would start investing, looking at where asset values are right now. Are you looking at the banks or the non-banking stocks?
That's delving quite deeply into our strategy. But like I said, we're pushing for a balance. So fast-moving consumer goods, the defensive stocks that have worked quite well there, strengthening the NSE performance in the recent past, as well as taking some strategic positions on the more aggressive banking stocks. But you know that banking stocks do consist of a significant portion of the market cap. And
then, of course, for the bond market, we've seen 20-year bond yields up to the federal government bond yields up to 12.9% recently. Yeah. After bond prices corrected quite a bit. And you are projecting in the second and third year 12% and 16% respectively. To what extent is that reflecting your expectations for the bond market?
The interesting thing about the bond market is we're not just looking at sovereign bonds anymore. We're also looking at quite a number of emerging subnational bonds. Now, BGL as a group is very active in midwifing a lot of those bonds, particularly at subnational level. And we're also going into corporate bonds as well. So if you look across that trajectory, that entire playing field, there's a lot of activity going on, and you're going to see the prices reflect the realities of the market going forward.
But one can argue that, particularly for corporate bonds, we haven't seen that many issues recently. This year, I think I count maybe 2 or 3.
Correct.
So are you anticipating more, even with all the incentives that have been given by the government for the corporate bond market to take off? We've seen that take off very slowly. What are your expectations for next year?
For next year, we believe that many more organizations will see the value in coming to the market. One of those things that is a significant issue for most of the manufacturing concerns now has been power. The Manufacturing Association has really called out for that, and we believe as this administration gets a hold on power and they can stimulate productive capacity, you will see more companies come to the stock market to try and raise financing, or come to the capital market rather, try and raise financing, particularly with the successes of the 2 that were launched this year and the kind of pricing they were able to get.
And what would you say are the challenges for your business going forward in the Nigerian context?
In the Nigerian context of asset management, one of the major issues has been an analysis of the market and being able to predict reasonably where the market is going to go. Analysis has been all but thrown out of the window for quite a while now. The fundamentals have been strong, but we haven't seen the market respond to the strength of those fundamentals in many cases. So that has been the most challenging part of it. But I believe there will be more clarity within the next year. We've seen a lot of anomalies happen this year, particularly as banks have tried to sell down their positions and so on and so forth. As there's equilibrium achieved more towards next year, I think things will normalize.